Tax strategies for a successful 2024. Hey everyone, and welcome to today's video. I'm CPA Dan Hodges, founder of myfavoritecpa.com. In today's video, I'd like to delve into some tax strategies that could help you not only through the 2024 tax season, but also for the entire year. As we dive in here, let's remember, optimizing your situation not only involves minimizing the bite from the government, but maximizing the amount that's in your pocket. First, let's talk about one of my personal favorite strategies, and that is taking advantage of and maximizing retirement accounts. One of the most powerful tools in your arsenal is your retirement account. Contributions to retirement accounts such as 401ks, simple IRAs, and SEP plans can significantly reduce your taxable income when you're self-employed, a business owner, an investor, or an entrepreneur. And not only can we significantly reduce today's taxable income, but we're setting money aside for the future, which is clearly a win. And when that money is set aside, while that money is sitting there invested and growing, the growth is not taxed. Whether it's taxed eventually someday or not depends on exactly the nature and makeup of the retirement plan vehicle that you're using. And there are different options. All financial planners have a suggestion. I don't think that they're always right. Every situation is as unique as DNA. Sometimes financial planners will talk about in favor and get really interested in a personal type of plan called a Roth IRA. And some of the business plans I was just talking about, like a 401k, it is possible to segment your income and have some go to a traditional 401k and some to a Roth 401k, which is like a Roth IRA, but bigger amounts. The premise is similar to a retirement plan in that you put money in there and it grows and grows and grows with no tax on while it's growing. The difference between a traditional retirement plan and a Roth retirement plan is, for a traditional retirement plan, we get a tax break up front. A Roth retirement plan, there is no tax break today. The reason financial planners like a Roth scenario is they believe that maybe in the future when you retire, you'll be in a higher tax bracket. So wouldn't it be great to have that income tax-free? I personally feel like it's something that you need to think about and consider, because it honestly is good. It's very good to save taxes today. That's going to help you overall grow your assets. But at the same time, it's nice in retirement to have different pots that you can draw out of for retirement. If you have some health problems, or if you need to replace a roof or a furnace, or if you need a new car. I've talked to lots of retired business owners who, in an extreme situation, if you put all your money into a 401k, a simple IRA, or a SEP IRA and have nothing outside that, when you need a new car, you either have to borrow from the bank or take money out of the plan and then pay tax on it. So back to the retirement plan, be sure to maximize the amount that you can do for the whole family, not only for you, but your spouse. And if the kids are involved in the business, why not for each of the kids? Now, when we're doing things like having the kids work in the business, we need to make sure that we're dotting the I's and crossing the T's. It's not always as easy as you see some TikTok guru talking about. There's a lot of things to think about. Next, let's talk about another huge opportunity, and those are tax deductions and tax credits. A tax deduction is something that is used to reduce your profit. So let's say your preliminary profit is at $100,000 and we have a $20,000 deduction. The deduction means that instead of paying tax on $100,000, you'll be paying tax on the $80,000. It's very, very different than a tax credit. A tax credit is a payment that you make and you can actually treat it with the government as if you wrote that check to the government. As a veteran CPA, I evaluate these things all the time, all the time. Oftentimes, tax credits are worth far more. They're worth multiples of any deduction, but every situation is different. So you have to look at it and think about, is a deduction better or is a credit better? Don't overlook the myriad of tax deductions and credits available to you. It is so exceedingly common that business owners, especially self-employed people without an accountant, they do not take all the deductions that they are entitled to. It is exceedingly common. It's really unbelievable. You have things ranging from education costs to, on the other end of the spectrum, home office deductions. You know, we want to make sure that we're maximizing and optimizing everything we can that's at arm's length for you. Let's make sure you get all those deductions. Make sure that you're thinking about all the deductions and credits that are available to you. And most importantly, keep meticulous records about the deductions and tax credits that you are utilizing. Another huge thing that so many people overlook is timing. When I'm talking about timing, if you are having an outlier year, if something comes up that's going to shoot your income through the roof, and it's not likely to happen next year, really want to think about the timing there and perhaps match that income to some expenses that you have to offset. If you get the income this year and the expenses come next year, you end up with a very weird situation where this year is high income, high tax, and next year is very low income, very low tax. And as a result, it's theoretically possible, I've seen it before, to pay a much higher effective tax rate between the 2 years. Watch pending legislation. I really cannot act on legislation that's being considered. It's until the law is passed and it's in effect, we really can't do anything about it. We're just speculating. But as a business owner, pay attention to what's going on. Be involved in the legislative process. Read and educate yourself. And if you see something coming to the legislators that they're going to vote in and the president is going to sign, or in your state, they're going to put it in place and the governor is going to sign off on it and it's going to become law, stop and read it and think, could this affect me? And will it affect me this year or next year? And how can I react and respond to it? This is important. This is your money that we're talking about. And the government is trying to reach their hand in your pocket. Educate yourself and let's just make sure that the money is kept where it needs to be. Lastly, and along the same lines, if you are paying a lot of tax, you are kidding yourself and you're cheating yourself if you're not an accountant, if you don't hire a professional to advise you on this stuff. I'm talking about an enrolled agent here or a certified public accountant. If you have the right person, they are talking to you about your numbers during the year and talking about where your numbers are trending, and as a result, where your taxes are headed far before the deadline. I'm talking like 9 months before you'll file a tax return. This is what separates the men from the boys, as my dad would say. Some accountants, they throw out the term tax planning, and their idea of tax planning is when you turn in all your tax paperwork, they'll look over and ask you, did you give anything to charity? Ah, there, we got a winner. We're gonna get a deduction for you. That is not strategic tax planning. Strategic tax planning is looking at where you are trending, visualizing where your taxes will be, and then talking about ways to bring it down. There are professionals out there. I have colleagues all across the country in my association, and we all do things a similar way. You're watching, where are your numbers trending? Where is your tax headed? What can you do to walk that down? And then we're talking with you about it and empowering you. This is gonna make all the difference between high tax, constant high tax, and managed optimized tax, which is, at the end of the day, like I said at the beginning, money in your pocket. Wrapping up here, I just want to say that managing your taxes is a year-round endeavor. This is not something that just happens in the months of March and April. No, no, no. You see me preach this on my social media and talking about it on my channel because I really have this internalized. You as a business owner, you have direct control over how much tax you give the government, but you need to follow the process that I'm talking about, and you need to be working with someone that understands it and that's going to provide leadership. I know you're busy. All the successful business people I work with are extremely busy. We have intentional processes at our firm to help our clients get a better result. Is it a magic wand? No. You have to participate in the process. But if you have the right person, they're going to provide leadership and not leave you out in the cold. By implementing all these strategies and staying proactive, you can optimize your tax situation and keep more money in your pocket. I just want to thank you for tuning in today. If you found this video helpful, I would really appreciate it if you would give it a thumbs up, and also if you would subscribe to my channel and hit the alerts bell so you get the notifications. It's not only going to help you, it's going to help us as we try and expand our channel and see who else out there we can help. And on that note, would you check out my Linktree? It's linked in my social media description. I have some very good stuff on there. If you are a business owner, self-employed person, entrepreneur, epreneur, investor, please check out my Linktree. I promise it's going to be worth it. And as always, if you have any questions or if you need personalized advice, don't hesitate to reach out. Until next time, happy tax season and happy tax planning.